Thank you for joining us today for our Research and Development Tax Credit webinar. Before we begin, I have just a few housekeeping items to go over. Today's webinar is eligible for 1 tax CPE credit. In order to receive the credit, you must be active for the full duration of the webinar and answer at least 3 of the 4 poll questions, which will appear on your screen throughout the presentation. Each poll question will only be up on your screen for approximately 30 seconds. While the poll question is up, you will not be able to see the PowerPoint presentation, but don't worry, the slides will come back on as soon as the poll question is closed. If you have any issues at all submitting an answer to a poll question, please just send me, Kayla Juba, a chat using the chat box on your screen as soon as possible with your answer. Everyone is muted, so please use the chat box to submit questions as you have them. And then please just note that you can download the PowerPoint slides through the GoToWebinar panel on your screen under Handouts. We will also be sending out the PowerPoint slides and a recording of this webinar on our website and via email by the end of the week. And for those who answer the poll questions that they need to, we will be issuing CPE certificates within the next 2 weeks. So thank you again for joining us, and I will now turn things over to Pat Rogers.
Thank you, Kayla. Good afternoon, everybody, or good morning to anybody on the West Coast. Thank you for joining today. CPE, 1 hour. So again, make sure you answer your 4 polling questions. Again, there's technical difficulties, please use the chat box, but obviously throughout, if there's questions about presentation or questions amongst your specific facts or your client or your company, obviously feel free to reach out. And my name is Patrick Rogers. I'm the Principal R&D Director here at Brown Plus, and let's get it started. First off, some housekeeping, a disclaimer. Again, this does not count as actual professional advice. Please do not take this webinar and begin filing or creating your own documentation for R&D credits. This is more for informational as well as a process about what we can do to help. My email address is below. Again, if there's any questions, follow-up answers, or questions that you have, we'll make sure everything is accessible. So for today's agenda, we have a number of things to get through. There's a lot of information, some a little bit more tax friendly, some a little bit against the taxpayer, meaning it's pro-government. So the R&D credit, what it's about, the function, recent developments. I do have kind of the latest and greatest and where potentially it could be going. Qualifying activities that really generate what the credit is about. We'll also touch on a few things like credit misconceptions. Most folks feel that maybe they don't apply. The current CPA provider has addressed this, or maybe are too afraid to look at this scenario. A few case studies across different industries to provide examples of what we can do to help and obviously clear up any misinformation about industries that don't qualify and again how it can work out. So for the Brown Plus R&D study, again, how we at Brown Plus and the R&D group can help you monetize as well as optimize these tax credits. Section 174, again, we'll touch on that and how that correlates back to the R&D directly. And then lastly, some tax form changes, reporting requirements, and record keeping. So with that being said, a quick intro about the R&D tax credit. So what is the R&D tax credit? We are looking at a number of things that qualify, and we'll touch on things that specifically correlate to who's eligible, key benefits for the businesses. But really what it is, it's a new and improved, whether it's you're developing it, so it's a new and improved or enhancing to existing products, processes, techniques, formulas, software, computer software, I mean by that. So please don't think that you're going to buy an off-the-shelf software solution, plug and play in your business and expect a credit. That's really just the designing feature. So we can touch on a little bit more how that correlates. But the big thing to stress here is it's United States. So it's a US-centric credit. So the costs associated to it, which I'll go into, there's a little bold item here, QREs. So you hear a lot of acronyms. So I'll mention them now. So qualified research expenses, or QREs, are really what generate and help a company utilize the R&D credit, QRAs, which are the qualifying research activities. So these expenses, or QREs, I should say again, is wages, supplies, or contract expenses. There's another small feature in there for leased computers. So when we talk about software, the folks are leasing computers to help with the coding or the battle testing of the code that they're creating and the architectural design of that platform. They can lease computers to help generate or work through those hiccups or, again, battle test and trial and error. It's available for both federal and state. And what I mean by state is there's 38 states that participate in the R&D credit claim, and each have their own facts and circumstances, but at the end of the day, it's a federal and state credit. So good rule of thumb, so the federal benefit is about 5 to 10% of the company's qualified research expenses. And so a good rule of thumb, I would say, is $1 million of QREs, which is expenses paid. If they're all qualifying, it generates about 10% federal benefit, which is about $100,000 of R&D credit. That could correlate, again, there's states as well. That $100,000 at 10% is just a good example of what the effective tax benefit for a company. It is non-refundable, but again, if there's not an immediate use for the credit, there are avenues where it can be carried back 1 year to offset tax. So it's a dollar for dollar reduction of tax. And then it can also be carried forward up to 20 years. Another quick point to bring up there is it's not essentially one and done. It's an annuity. So you can generate R&D tax credits yearly. So it's not looking at it once and you could have a carry forward. It's all about each year what a company or your company could do to qualify. A nice facet is small businesses with 5 years of, less than 5 years of revenue or below $5 million of gross receipts, up to $500,000 can be offset for the R&D credit on the employer paid FICA, which is taken on your payroll tax credit. So if you qualify there, so a nice added benefit there if there's not immediate use for it. Whether you're not in a tax position, your losses, startups can utilize these credits immediately versus having to carry forward. So a quick history, legislation, evolution. We'll take you through a little bit of a timeline. Essentially, this credit's been around since 1981 and has definitely changed over years and then where we are today. So just a few to highlight some great examples. So if folks are looking into the credit for the first time and they qualify, people will say, is this new to me or is this a new tax attribute that's available? Usually the answer is no, it's been around since 1981, but it's evolved, as I mentioned. So just real quick, 86 was the big tax reform. So 1986, a lot has come about, and then really the tax reform tightened requirements so of the qualified research. A really good point is the 90s, the basically sunsetting, or again, the R&D credit was never a permanent thing, meaning businesses would weigh the option to say, do we claim the credit? Do we look into the credit? Because again, if it's not part of law, and if it's not part of current law, then what do we do? So a nice facet there as we skip ahead to 2015, the PATH Act, which really made it a permanent item. So the tax credit was here to stay. And we always say it's as permanent as the next tax legislation, but it's really gained some momentum and obviously has taken on a pretty immediate, the way the world is, innovation's key, especially in the US. So as we move into 2017, the Tax Cut and Jobs Act obviously maintained the credit. It did have what we call the 174, Section 174, a capitalization requirement. So that was introduced in 2017, and that was, we looked at it as kind of a balancing act of that bill. So that ultimately ruled that anybody claiming the R&D tax credit would have to, instead of deduct your expenses immediately, you were generally required to capitalize it over a 5-year life, and then 15 years for international. So here in 2022 and where we are today is really what the elephant in the room is where are we with the current tax law? So quick polling question. Kayla, do you want me to read these out or? Okay, perfect. Has your company or client completed an R&D tax credit assessment? You probably have about roughly 30 or 40 seconds. It's a yes, no. There is no maybe so. So at the end of the day, please take your stuff. Okay. So I see 63% are no, which is good for us today because we want to obviously make sure we help address and work through, how we can help. And again, the R&D tax credit, as we mentioned, is beneficial to companies because really is an incentive. So proposed legislation is really where we are, is the hot ticket today. And as of recently, when I say recent, it's 2025, March and April. The attempts are in motion where, again, that Tax Cut and Jobs Act, the extenders, they went through 12/31/2025. So one way or another, this will have to be addressed. So the House passes a budget, basically paves the way for the permanent R&D tax relief. So this budget deal includes long-awaited fixes to Section 174 and R&D expensing. What I mean by that is, the Section 174 would either be deferred, meaning out a number of years, or repealed, which would mean it's non-required, meaning the law that we all wish we had back in pre-2022 would be reinstated. There's going to be a lot that comes down the pipe about if this does come to fruition, there has to be some type of recourse. So we will have to wait, obviously, keep everybody in light of what that looks like, whether it's amending or if this goes all the way back to 2022. Is there catch up? Is there phase in adjustments? But this last bullet here is R&D expensing provision. It's in legislation negotiations. So the momentum is building for tax reform, and the House targets the floor vote by the week before Memorial Day. And I have a quote here from the House Speaker Johnson, basically saying if it's not done before Memorial Day, it will be done shortly thereafter. But our timetable is on pace. So basically, if we're going to get it done ASAP, send it to Senate so they can do their part, and we'll get this to the president's desk for signature. So again, I'm with everybody in the audience today. Not really sure exactly what that means, but the good news is it's in negotiations, and obviously legislation has to take its place and go from there before the president can sign and make this official bill. So qualifying for the credit, as I mentioned, it's a company's innovative, new, improved product, process, technique, formula, software. It really needs to go through what's called the 4-part test. And what that is, permitted purpose, technological nature, the elimination of uncertainty, and the process experimentation. So again, these aren't black and white. So, you're not going to look up and say, Brown Plus, for example, if we purchase an ERP system and we have a lot of time and energy building out how that customization is going to work, we're not going to look up Section 41 of the tax law and see that ERP Brown Plus qualifies. Here's their number. So these 4-part tests of the IRS generally are looked at as please provide documentation and how the taxpayer or how the company qualifies in each of these buckets to make sure that they are R&D accessible or they are valid R&D claims. So I like this slide a little better because it breaks out and gives, and I know anybody who's looking at the screen is probably relatively small, but next to each of these 4-part test titles, there's the actual tax legislation. So under each, that's generally what the IRS focuses on when we are going to talk about R&D credits. And then at the end of the day, if they're valid, what the IRS would look at. So the costs that qualify, mainly it's the employees. So anyone who's directly, as well as supervisors, meaning project managers, to ensure that the R&D tasks are roadmapped correctly. What they're looking at is effectively what's going to be sustainable or built out to their liking. So people are the biggest driver of the credit. So when we look at the question 1 about having looked at the R&D assessment, we'll generally ask what are some of the projects and then really hone in on some of the people. Contract research expenses is a big one too, because a lot of folks on the outside, technical experts, as an extension of your employees or your team that's performing these R&D activities, the contractors qualify as well. So, we want to focus and look too is not leave dollars on the table for you and your company when it comes to R&D credit claims. And then lastly, supplies. Obviously that's pretty dependent on what you're doing. So it's really items that are materials that are consumed or destroyed during prototyping phases, really tangible personal property during what we qualify nature of research. I did mention a little bit about the computer leasing. So cloud computing costs are usually the most like AWS, pay to play, working in the sandbox and developing some of these type software expenses. Leads us to a second polling question. Again, there's 4 of them, but this is one just to test to see if everyone's paying attention. So project expenses must undergo the 4-part test to determine whether the R&D claim meets the qualifying standard for approval. True or false? All right, a sound 95% say true, 5% say false. I should have made it like the true questions in school about if it's false, what makes it false, or false, make it true. That is a true statement that generally these costs all have to particularly go through the 4-part test. So if you go through an IRS audit, or if you're working with us to help define what you're doing, we will be working with our IRS hat on to say, okay, how does this apply to the tax code? What are you doing that's meeting all 4 parts? There are some avenues called shrink back, meaning you can look at certain portions of these projects and apply them. But generally, that's a true question or a true answer about all should go through that 4-part test. So this slide here, again, it's a little bit of a throwing everything into it. Again, I just want to make sure we'll give you an example that it's not a finite area or defined area that says one or the other is qualifying or not. What does qualify? So if you're developing, designing, you're improving. Some examples here, like new and improved software concepts, algorithms or coding, building out tests, first article prototypes, custom tooling, fixtures. The biggest one we see, and again, with the software aspect of it, the manual processes into an automated one for software development, or even one through robotics and technology based there. One thing I do want to specify that I might have briefly went over in expenses. So robotics is key, but the costs for these particular items, like if you're going to buy a pick and pack robot arm, the costs are generally depreciated and they're not included in your R&D credit claim. That's usually the best bang for your buck at the end of the day. That's required, but you can include equipment costs into the R&D credit claims. But again, same thing here. If you're including speeds and feeds when it's ensuring quality, integrity of these platforms and parts. So there's generally a lot that qualifies. Some of the areas that don't qualify, most folks, when we do have a sit down or a discussion point about, tell me about what they do, people think all they do is R&D, through and throughout. So the efforts that would be deemed routine or keeping lights on activities, specifically in software point of view, it's, if you're utilizing platforms that are generally just obviously keeping clients happy or servicing accounts. Reverse engineering doesn't qualify either. Again, I know it's basically competition's key. So, what your competitors are doing, you can't take their platforms and reverse engineer to better yourself. Research conducted outside the US is a big one. Folks spending time that, working with vendors, and sometimes you have to have the hard conversation, let people know Canada is not part of the US, even though it's okay. But generally, those contract costs, they have to be US based as well. This is a big one. Funded research doesn't qualify. And what I mean by funded research is, I like to bring in the terms in the pharmaceuticals industry, where, if people are spending time and resources into, again, they could pass the 4-part test. Obviously, they're, creating a drug and obviously finding the best formulation amongst it and how to produce it. But if it's funded, and when I think of pharmaceuticals, there's some government backing to that. So if the company that's performing the work does not have the economic risk and substantial rights of that product or that drug, for example, then it could be deemed funded by the U.S. government or whoever is actually paying for the costs associated to performing that R&D. Small features here too, quick ones, cost of land, depreciable properties, which I mentioned about that robotic arm. Research after commercial production, that one's generally, there's a fine line. So if you're starting from conceptualization and going all the way up to it before you produce X, Y, or Z widget, you can't go live with production and say, well, this is still R&D time because I'm not 100% there with the product. So if you're going to roll it out to the general public or sell it, usually that's your stopgap or your stop time for when the R&D is deemed qualified. Market research, again, you can't perform test audiences or focus groups to determine what your clientele wants, so those don't involve money either. Polling question 3. Businesses can only claim the R&D tax credit if research is conducted in a laboratory setting. True or false? Okay, I think we might need to think the true false is a little more tougher on the folks because they're acing these. So that's correct. Basically, my point about the laboratory is that's usually a credit misconception. So if folks think of, and I'm going to skip down to number 2 there, really, only companies with scientists, the white lab coats, qualify for the credit. So that's kind of been the first point when it was rolled out initially, the credit, that hard sciences, biology, chemistry are the only ones that truly qualified. So that's unfortunately, not the case. So, if you're in a lab, of course, there's probably R&D behind it, but that's not a requirement. The real first one here is the innovation and qualify activity must be new to the world or one of a kind. That's also false as well. It just needs to be generally new to you. So you could be adding another vertical, maybe another product or a platform that's, could be out there in the world, but you haven't figured it out for yourself of what it is you could sell. So the idea of being new to the world, you don't have to have revolutionary technology to qualify. It's really what's going to improve your business or improve your bottom line at the end of the day. The process changes, but particularly some products too along there that are new to you. And the last one, pass-through businesses and shareholders subject to the AMT. Again, we're in the Northeast here, so AMT definitely does factor in, but are unable to benefit from the R&D credit. So that really was mitigated around that PATH Act, so 2017, but really starting 2016, the R&D credit can be used both for regular and the AMT pass-through for small businesses. So really that's another hurdle that many folks didn't look into because, again, it was a moot point because they were an AMT. All right, let's focus on a few items. Again, we went into a lot of the design work of what it is the R&D stands for, what it is that it entails, about the costs. So let's look at some real examples that we help, obviously, industries. We'll talk about a manufacturing company, we'll call company A, and then a software or financial tech or fintech field for company B. So first, we have an R&D manufacturing case study. These are actual numbers taken on one of our clients up here in the audience today, and these look familiar. Thank you for your advertisement in here. But for company A, they engaged Brown Plus to conduct and perform an R&D tax credit study. We looked at both the QRA and QREs, which is the research expenses and activities. So we wanted to look at each department and figure out what are they doing that helps, again, pass that 4-part test and come up with, obviously, conducting time and reviews about what are we looking at. So in these facets here, the activities included the manufacturing process. They worked for a contractor outside to design and build guards on recutters, conveyors on the production lines. So right away, that permitted purpose is telling us that they're spending a lot of time and energy and resources to, at the end of the day, gain efficiencies, so increase productivity. So ultimately, the reason or rationale is to prevent injuries, hazardous areas, and reduce downtime. And anybody in the audience in the manufacturing industry, downtime is one of the most drastic, where that's you're stopping machinery, you're stopping people from working, you're stopping money from coming in the door. So these process improvements or these production line build outs are going to help save, again, efficiencies, and then have obviously equipment to help better the yield of what they're producing. So the activities were analyzed. We determined their eligibility under Section 41, which is the R&D credit. We took a look at projects and built out the study, and then mainly at the end of the day, we relied on interviews and we did plant tours to understand, okay, yes, this is qualifying. So a study was built out, we delivered, and the results were great. In the federal, they received $89,000 of a credit to claim rate on return. Pennsylvania, similarity, we looked at all activities, or that contractor and employees are based in PA, so they had a nice $24,000 Pennsylvania credit. So all in, a company spending, this time during the 2020X tax year yielded $113,000. So those examples here of $113,000, all in, they had about $1 million for federal, so $1,027,000 to be exact. So kind of back to that rule of thumb, if they spend $1 million, and that doesn't have to be just employee wages, you can see it's a combination of both people and contractors. That $1 million granted about $100,000 of R&D credit. Do you have a question?
We do. The question is, would the insurance brokerage industry qualify for the R&D tax credit?
Of course. So it just would depend on what the insurance brokerage industry is doing. So when I think there, I generally think insurance, and I don't mean to sound against the insurance industry, but usually a lot of the technology used and softwares are dated. So the spend on, whether they're building or buying. So when I say build or buy, most companies will take a look inside and say, can we build something that's going to better our lines of business, or it's going to better our working with agents or working with other vendors. So usually the software builds within insurance companies like that nature would be the focal point and would qualify. Next case study is fintech, so financial software study. This is a startup. So generally when I mention the term startup, they're within that first 5 years of being a business. And I didn't include this in the slide deck, but we'll just say for example purposes, they're below that $5 million of gross receipts, which are generally sales. So they really spent time to develop tools for clients to manage, track, and analyze financial data. So they engaged Brown Plus to conduct an R&D tax credit study. Their QRAs and their QREs for the study were identified and documented. So they basically looked and said, well, company B here, let's focus on the user experience and innovation. They invested in improving the product's interface, the underlying architectural, and then to maintain that competitive edge, they include developing new financial analysis, as modules and improving their existing products. So ultimately, they're doing an awful lot of R&D. So a lot of their people involved have spent a great number of time in the software development phase. So we looked at and analyzed the eligibility, the projects. So the company, and we basically looked and developed and completed what we call is, obviously we want to make sure the 4-part test was utilized here. So R&D was a really nice benefit for this client of $189,000 for federal purposes, and that can be taken if they elected to. If they didn't have immediate tax to offset that $189,000 credit, they can either have it carried forward until they start obviously generating some more tax income, or they could take it on their R&D credit claim form and offset and make a payroll tax election. So they could take the $189,000 and move that into what they would be their payroll filing. So that quarterly filing would be an avenue where they could take that. Pennsylvania here, again, this scenario is another good benefit because of, again, the spend is where the folks were located. So this is another Pennsylvania-based company, and the contractors used were also Pennsylvania-based. So that $2.4 million was the qualified research expenses taken that yielded, really substantial size credit. So all in federal and state, $355,000 is a really big chunk for a small startup company. So with these case studies, again, these are real life examples. So again, thank you for if you're in the audience today. Thank you for the advertisement, really. So our goal here at Brown Plus is to obviously make sure our clients or your clients or your company is serviced and to the best of our ability to make sure that the R&D is addressed and optimized. So we'll provide a step-by-step methodology of our approach. Provide a value of what the credit could be, so nice credit range. So we'll do a proposal to ensure it's worth it. Again, you don't want to obviously look and say, I'm doing X, I expect Y in return. We can obviously give you the transparency across the initial steps of talking about it and identifying the R&D, and then give you what potentially could be a nice credit range. Client engagement, we can go through specifics of what are deliverables and how they're supported. So one, the R&D tax credit study, as you saw in the two case studies we just went through. Another one could be a calculation only. And what I mean by that, as I can touch on the next slide, is say you're not in that level of detail that you require a study. Say your credit range is $10,000 or $20,000. We might recommend you do a calculation only. Do you have a question?
I do. So the question is, are costs paid to a third party to develop software for a niche insurance market eligible for credit? The third party is needed due to size of project and size of internal staff.
I would say yes, and I would say the stress point there is if they are US based. So if the vendor is being used to, again, in the scenario, provide a much needed build out, so yes, but I would say just the sourcing of those costs, we'd want to make sure are US based. So that would be a good point. Hopefully that answers the question, but yeah, that's a good prime example of what are the process improvements or the product that the individual does qualify. And last note here is industry expertise. We stand behind our work. We've been through audits, whether it's the federal level or state level, but another piece here is there's many firms out there that provide R&D credit services, and what that entails is you'd have to be able to defend it as well. So us here at Brown Plus for CPA firm, we operate in essentially in those scenarios is that $189,000 federal credit. We're not taking our win to say, oh, let's apply for 189 and if we get 75%, we're happy. No, we have industry expertise that $189,000 is your credit, and we stand behind that work to make sure that is your number, whether it's the owner's comfortable with it, the IRS is comfortable with it, we have to be comfortable with it as well. So the industry expertise is a necessity in this business. So our R&D study process, I use the term meat. So if you're in the manufacturing realm, if you're creating tangible products, we'd like to meet and see the facility, because usually that's a great way to understand your process, understand what it is that you're doing. You can ask questions about, again, if you have machinery, what's your scrap point of view? Usually, mainly, that helps us view and understand what it is you're doing now, what you've done in the previous years, because there could be a potential we can help amend and claim credits. It also gives us the wherewithal to ask questions and say, I can't do this just via a Zoom call. I need to be able to understand a little bit what you're doing. It helps us kind of steer where the R&D is, and we can hone in and ask the questions. For software companies, again, like that insurance, reinsurance type business, it's mainly probably a software discussion point, which can be done via obviously these discussions, whether it's Zoom or Teams. We really would like to talk to a CTO or talk to some type of folks involved, whether it is, again, working with that outside vendor, but we can probably provide us some type of insight A, what they're doing, and B, what it is the task is going to entail, meaning, and then if it sounds like it's a large build out or some type of software improvement that you're going to spend time and energy, and mainly time and resources would be one we would want to gather to help us determine the R&D credit feasibility, because it's got to pass that sniff test, and anybody in the accounting world can correlate to that. If it smells like R&D, it's generally R&D, but if we're hearing it's routine or maintenance type activities in that software field, then we can probably say, I don't think that's going to qualify. So, but again, step two, we do have some R&D credit feasibility. We gather the technical financial data and then really come up with, okay, what it is we need in that initial step. And usually step 1, 2, and 3, we'll come out and primarily do is complementary. Again, the last thing we want to do is, charge you for something that's maybe non-beneficial. So at the end of the day, is 1, 2, and 3 is that step 3, we prepare an estimate range, and that's both for federal and state. Where it is, we see that with the facts you provided and with our due diligence of just talking to some of your folks or, understanding what the spends are, we can determine what the value is, and we could recommend one of 2 things. I should say 3, probably 3 things. First one is full study, which includes a full report deliverable, which those 2 test cases we provided in the deck, they were full studies. Calculation only, which means, again, that's exactly where we're going to perform the R&D work to get the credit to you, and at the end of the day, a study's not with that one. So if it's a smaller credit claim, 10,000, 20,000, for instance, we would help obviously compute the credit and provide to you or your tax return preparer to include the return. And then the third one is we would recommend that there's no credit and say, hey, you might want to, work with us now to help document, because it sounds like your R&D might be a going forward thing. There might not be enough now that warrants a credit, but we can help you understand what it takes and what it is that you want to do now to start that process along. So in retrospect, 1, 2, or 3, 1 full study, 2 calculating, or 3 hold that thought. There's probably already further down the road. Last couple steps here is, again, up to the taxpayer, but again, when we engage, we'll schedule time interviews with and schedule time in the interviews with the employees to vet, validate, again, what they're doing, what their activities are, to hone in and make sure we're maximizing the credit claims. So the last 2 phases here is we gather information, prepare the calculations, and give to, whether if you're a Brown Plus client, we'll give right to the tax team. If you're preparing your return with another vendor, we give you and the CPA firm that information for federal and states that can be included in your tax returns. And then lastly, the study report comes to you, and generally we like to focus in, roughly a 60 to 90 day turnaround. So if we're going to kick off your engagement and talk to you through about where the R&D is, have the conversations and interviews take place. We'd like to have a nice turn time that you have the study that stands behind it, and it's an audit-ready document that at the end of the day you have. It's part of your records and review to ensure that you have it, and if it's ever audited, you can call us as well, but that is an audit-ready document. Question from Kayla?
Yes, the question is, can the tax credit be taken by a taxpayer who has a net loss for the year?
So if you have a net loss for the year, generally you can take the credit on your return, but it's going to be a carry forward. So you don't have taxable income. That essentially is going to be your point of where the credit's going to come into play. I would caveat and say that if you're in a loss position and you qualify for the payroll offset, which I mentioned, is you don't have to have taxable income there, but you do have to pass the 5-year existence and you're below $5 million in gross receipts. So that could be an immediate use for it. But the source of the question is, can you use it if you're in net loss? Generally, you're going to have some taxable income. There is a few sample sizes where that is if it's a pass-through entity, you could take the credit if the owner is paying himself a W-2 or herself a W-2. That credit can be taken in that respect, but generally you need to have the taxable income to offset with the R&D tax credit. So really in the past 5 years, again, we like to kind of hone in on, I know we just went through our process, but of all these clients that, we're going to sum on this next slide deck or next slide is, we've worked through many clients and their credit claims and provide a great amount of cash savings. So in the past 5 years, we've helped our clients obtain approximately 5.5 million. That's federal and state R&D tax credits. So that's a lot of time spent, again, learning about our clients' businesses and understanding what they're doing to help, again, back and document, what it is that the R&D credit is, as well as give them the study deliverable that stands on its own if it's ever challenged. So we have been challenged by the IRS. We have been challenged by other states. And as I mentioned, we do stand behind our work. So Section 174 is kind of tying back to all the comments about where we are with legislation and really tax cut jobs. So the 174 is the big elephant in the room where, again, people have the R&D credit claim. This is no news to you, but if you've never taken the credit claim yet, this is one that you also have to take into consideration. So, the amendment of Section 174 is you have to capitalize the R&D expenses. So all of those wages and contractors and supply costs, they have to be capitalized over a 5-year life for domestic, which is US, and then 15 years for the foreign. So the effective 2022 tax year, again, is up to discretion to figure out if this Section 174 repeal is going to happen. It could go back and go as far back as 2022. But this mandate really, it gained a lot of attention and pushback from a number of industries because basically the more you spent in the R&D portion of your business, the more tax you generally had to pay. So really there was a negative impact on small and mid-sized US businesses because they lost that deduction. Again, it is over 5 years, which is, I get it, it's taken into consideration, but that's why we're monitoring closely like where this next set of tax legislation is coming next because it is so important. So real quick, a couple similarities and differences between Section 174 and 41, which is R&D credit. So basically all R&D credit expenses, so everything we talked about for the credit, it must be Section 174. So really the credit you're going to produce is not changed, but it's really the deductibility of these expenses. But just also keep in mind that not all Section 174 costs are Section 41, which is your R&D. So 174 is a little bit more expansive. And I mean by that is when we talk about employees, so the wages. So for R&D credit purposes, it's box 1 of your W-2. For Section 174, it's actually box 5. So which is employee full burden taxes, benefits, insurance. So right away, you're kind of creating yourself a little bit of a disconnect there where, other items, patent and patent pursuant costs, they don't qualify for the credit, but in general, if you're going to spend time, energy, and building out something, you're going to patent it. So unfortunately there, patent costs that go amongst, the R&D of your work, they also are added to 174 portion. And then here's a big one that not many people focus on, but that contractor research. So the term 100% versus 65%, to shed light on that, your R&D credit, if you're claiming a contractor, bring up one of those chat questions, for example, that contractor you're spending on, say you're spending $100,000 on that vendor, only 65% or $65,000 of that cost would go into your R&D pool, meaning your R&D bucket, your REs that can generate credit. For Section 174, of that $100,000, you have to take all $100,000 of that into your Section 174 portion. So right away there, that's a big disconnect of 41 and Section 174. Only question 4. Is your company or client ready for the R&D tax credit form changes and documentation requirements? Yes or no? Okay. So I have 61% saying no, and the others are now experts saying yes. But I would assume those are the Brown Plus people that are logged in with the yes of 39%ers. So that's a great question, because I like to use that as the next springboard. I brought up a timeline of the R&D, and obviously dates back to 1981. But really, as we've moved year over year over year, yes, it's being addressed right now. Section 174 we touched on, but the form is changing, and it's changed already right in front of us. So the 6765, which is the form that the federal R&D credit is claimed on. So we compute it, and if you're a calculation only, that's the form you're getting. Same thing with a study, you're getting the credit claim, and it's a mock 6765. So in June of 24, the IRS revised these 6765 going forward. So it's not just a 2-page form that, again, Brown Plus computes the credit, we give it to you, you claim on your return. It basically has mandates now. We need specifics. And I say we, as the IRS generally wants more to it. So it's expanded upon, really, it's a 4-page form now, where it could grow even further. But there's new value inputs, and what I mean by that is new piece of information is you need business components for the tax year. So for our clients who service for 2024 and you received your credits, it looks a little different. Not the number generally, but the form we provided. So number of business components, and let me just kind of go into real specific of what that is. That's going back to your permitted purpose. Like, is there a new and improved product, process, computer software design, technique? So their IRS is really looking at, if you're performing R&D, we need to know how many projects, how many processes, and that has to be included in your new form. So generally, they're almost looking for an R&D credit study to be submitted into the quotient of filing your credit claim on the return. So that's another huge piece of legislation that has come down the pike. Again, mainly that's IRS driven because they changed the form. Lastly, another big piece here is they want to provide the amount of officer comp. So the officer wages that go into the R&D, that's a big information piece, because both of these are telling us that they want to really hone in on, okay, how many business components, how many projects are you doing during the year? And then what is the level of ownership or officers that are included in your R&D? So, there's two things there that tell me that you probably want to make sure you have a study in place that, again, officers generally have a pretty high compensation. So there could be officer comp, but there could be a study presumed there that the IRS could challenge. So with the filing requirements, there's a number of things that we want to focus on. So more documentation, there's more complexity. So this requirement really is, you want to know what your business components are right from the start. This really isn't any different from how we at the Brown Plus R&D Group focus on your important information about building out a study or building out a credit claim. But it's just important to notify that now that's going to have to be taken a step further and filed on your tax return now. So again, same thing here is a stricter wage classification. And it shows like a wide range that not only you're telling the government who's involved at the direct level, they want to know supervisory roles. So of the R&D credit you're taking, you have to be able to bifurcate out who's the manager of the project, who's the staff, or who's the owner of the project, from when it comes down to the CTO, if it's a technological build out, and down to the software engineer. So really the information is, you almost have to start tracking your time to figure out, or ticketing your information to say, here's what my team's spending time on, and you basically have to divulge that data as well. So the IRS scrutiny is a big one too. So if they're tightening the compliance about these changes, chances are they're going to probably be looking at the credit claim and determining some type of safeguard or benchmark to say, if I'm going to put this return through the computer, they might have something that might kick out a generated notice or an audit, knock on wood, that potentially could challenge your credits. And then going forward, this one's mandatory for 2025, but the Section G, which really is businesses need to act now and stay compliant. Section G is generally you're going to want to basically include your study within the tax return. So the good and bad news there is, the good news is it helps us as the CPA firm work with our clients, work with our outside R&D claim participants here, that give them what they need, some standards, some record keeping. What can we do to help make sure you're ahead of it, versus you never want to get a notice of you under audit and then, be reactive and say, well, you could have did this. Having stuff time-stamped or the contemporaneous documentation is key. So for tax years 24 and 25, you want to basically have what are the documents on hand, which again will help you work with and determine in the study, or even just some advice to say what it is you should be handling. Organize your business components. Basically, keep a list of your project components or your projects to tell us, okay, what are we doing? You don't want to lump them all together, because one asset can be challenged, and then you could lose out on the whole proximity of what the project is. So you want to basically have some unique identifiers of what are these projects, what are you doing, and what helps set apart what is normal versus what is kind of the added value that you're improving. This one's a tough one, but again, not many people have true project accounting, nor is it required, but a nice facet is you can help establish that clear connection, what the costs are to, again, an invoice for materials that you're spending as, I'm using this as a test batch. So if you're able to identify these on a more of a timely basis and have that connection of cost to the qualified research activity, that really goes a long way. Couple things here, backup documentation. Again, wages are wages, your W-2s are going to be W-2s, but you want to basically have a support, and if you have folks identified as being in research activities, again, tracking time isn't required, but some type of time tracking might be necessary just to ensure you have that backup documentation. A big thing here is work with an R&D tax credit professional. Like, the days of providing it on a piece of paper like this and sending it to your tax return preparer are generally over, because if it's challenged, generally the accountant could say, well, this is all I got. And chances are that's not going to stand up in basically an IRS audit. So the R&D tax credit documentation, it shouldn't be, full-time job on top of your full-time job. There's things you can do now to help, obviously, alleviate that going forward. Our practice can help organize, identify, even document to ensure and give you some type of standardization. With that being said, there's another little quote I like here. He's a U.S. computer scientist, basically an expert in the field. The best way to predict the future is to invent it. And I like that is, if you're going to be able to obviously take the credit, you got to be doing something. You got to be able to set yourself apart and beat out your competition and have yourself in the best light. So most folks involved in the R&D are going to be inventing something, whether they know it or not, and chances are they're going to qualify for the credit. That being said, questions, comments, concerns, please use the chat box. And again, I thank you very much for your time, and hopefully, obviously, your CPE 1 hour has been valuable.
I'm not seeing any other questions at this time now.
Excellent.
All right. So thank you everyone again for attending. We really hope this information was beneficial to you as you proceed with your R&D tax credit journeys. As mentioned earlier, the recording from this webinar and the slides will be sent out by the end of this week, and then CPE certificates will be going out within the next 2 weeks from today. So thank you again, and have a great rest of your afternoon, everyone.